Last time on Trading Bull Z, our heroes recovered from a nearly $8,000 red day on an end of day last second Hail Mary play, and they swung some SPY calls. Unfortunately, SPY gapped down today, and our heroes found themselves once again in this precarious predicament. Would SPY recover? And will our heroes be able to find a way to come back from being down $8,000 on back-to-back days? Find out on this exciting episode of Trading Bull Z. What is going on, Z Trader? Zeno Trader here, and today we're coming at you with our market recap. We're going to be getting into my outlook for where SPY is going, as well as the plays that I took today, my swings, my hits, my misses, being down bigly on 2 consecutive days, some new strategies that I'm kind of experimenting with. I'll tell you how those went today. Trust me, you don't want to miss this video. But before we get into anything, I need you guys to smash the like button for the YouTube algorithm. Don't forget to subscribe and hit the notification bell so you don't miss out on any important market updates. And follow us on Instagram at Dragon Bull Z. And if you like what you see and you get value from what we're doing, we do this live every day on our Discord server. It costs you nothing to join. It's free 99. We are live in chat every day, Monday through Friday during trading hours. And we have over $5,000 of free options trading learning materials in our Discord server. The link to our Instagram and Discord is in the channel description. Be there or be square. So today, the first topic we're going to get into is basically the weekly roundup. Okay, the recap. This is the SPY chart weekly. As you can see, we're down on the week. We started at about 291. Now we're sitting at 285. The Bulls tried to stage a last-minute comeback, but it didn't happen. They got obliterated by the Bears this week, and they ultimately lost, and we are down on the week. We have, however, recovered from the lows here. As you can see, we hit about 276 there on the lows, and we have come back all the way to 285. So let's take a look at SPY on some different time frames. This is the 5-day chart. If we look at it on the 3-month chart, we looked at this chart yesterday. We were trying to get a sense of the daily chart to see exactly where SPY may be headed. And remember, I told you guys yesterday about this candlestick, and that yesterday was going to be a pivotal close. And if yesterday would have closed red, we could have assumed that this little channel here that SPY is trading in would have ultimately been broken. We have to also be careful because there appears to be the 50 MA here, so EMA, so we got to be careful with that. Anything down here is likely to bounce. So, but we did close on a pin bar green candle, a little mini pin bar, but a pin bar nonetheless, which typically I told you guys yesterday signals a reversal. So with that being said, look where we closed today, up a little bit more. So it looks like, preliminarily at least, we are headed back to the 200 EMA. If you would have bought SPY calls yesterday, yeah, you would have probably broke even because we didn't close that much higher than we closed yesterday. Marginal at best, depending on where you bought it. Now, if you bought them down here at 279, somewhere in this area, you would have been in the building today. But I did swing SPY calls, but the problem is I got into them before the close. And we'll talk about that a little bit later. So let's take a look at SPY on TOS. So we got SPY on TOS. Remember the VWAP strategy. But the problem is it's not really doing anything, right? So it seems to just be channeling when it gets either to the upper side or lower side of the VWAP band. So there's not really any plays that we can use with this strategy. We could turn around and look at, what VIX is doing. Just to try to get some context for SPY's direction. So we got a little bounce here. So this is SPY going down, of course, and this is SPY coming up, and then trend sidewards into the close and aftermarket. So there's not much either on SPY or VIX. Not much information we can glean. Neither are overbought or oversold. They're both trending along up a little bit above or below VWAP. So that's not necessarily going to help us. But what we can do is take a look at SPY in TradingView. Now this, and we're going to be talking about this a little bit later on in the video, but as you can see, this is the hourly chart, by the way. SPY came down to about the mid range between S2 and S1 and bounced. And you can really use this level as a support, even though it doesn't show up on the current day's pivot points. It's still valid for support or resistance. That's just a little key that I learned over time. So you may want to pay attention to that, especially if you use pivot points on TradingView. The previous days don't just go away, right? And you can see that here. And if you go back, you can demonstrate that much further. So we came up here, channeled, closed, barely above yesterday. So it's safe to assume, looking at all this data on the chart, I mean, it's very difficult to try and predict the future, and that's not what we get paid to do. So because if that was the case, we wouldn't be traders because our account would be blowed up, right? So up here, we got a double touch of around in this level on SPY. Looks like we may be headed back there again. If you zoom out and look at the overall trajectory, we might be headed back up that way, but we have a big test in front of us. Are we going to be able to get past P, this level right here? This is going to be a nice play if you want to make some money. Oh, remember I told you about the mid levels? Well, look, we got a mid level right there, and we're right up against it. Watch out for the SPY gap down on Monday, and then it might come back up. Let's see what happens. But I think from looking at these charts, that's my best guess. I think SPY will reject off of this midpoint. Either one of two things is going to happen. Either it's going to reject off of this midpoint here, which we're up against and we couldn't close above, and it'll either gap down Monday and bounce off of this midpoint here, or we'll gap up, break it, hit P, and bounce off it. And if we, it depends. If we have good economic data, and of course, we have to take into account any negative or positive data that may come out over the weekend. But those are my two scenarios personally. That's my conclusion. That's what I think we're going to be doing on Monday. Now, what to watch out for next week? Okay, we have some notable earnings coming out next week. One of them is Baidu. So we got some Baidu coming out next week. looks to be trading in a similar fashion to SPY. They are basically China's Google, right? So we will see how this plays out. But watch out, even if we come up here, we can get rejected. Last time we got up here, we got rejected. So even if we somehow make it past R1, and I'm really not believing in Baidu. And especially if you zoom out longer term, I don't believe in it. Unless they have some kind of blowout quarter and just kill it. I don't know. But there's going to be a run up to the earnings. As you can see, they were up 384 today. Remember what we told you about IV yesterday. You can capitalize on this. Even if, who cares what they do? They could take a dump on earnings. Who cares? Take advantage of the run up. Get some contracts. Even if we go, it runs up a little bit to R1. That's not a lot of profit unless you take a billion contracts. But still, you could play this, right? I mean, either way it goes. I mean, if it gets to R1 before earnings, you could get, a straddle if you're into that type of stuff. If you're feeling sexy, you could do that. Whatever the case may be, who knows? The next thing is Take-Two Interactive. This is going to be fire. Okay, I believe that Take-Two is going to kill it. Because they own like what 2K and the developer that makes Red Dead and Grand Theft Auto. What? Come on. I mean, this is no brainer. You know how much money people spend still on Grand Theft Auto, and how old is that game now? And then all the microtransactions and 2K, and people been in the house and got nothing to do but play 2K. Come on. It's an obvious choice. Just like when I called out AMD before earnings and they killed it. So yeah, what we want to look for is break of R2. Um, this little breakdown, it looks like they're having some trouble at R1. I don't think that'll be a problem next week. I think we'll get back over R1 and we'll probably retest R2. The problem, though, with this is that earlier in the chat, I told you guys about the four horsemen of the apocalypse. It's basically when a stock hits the same level three times. The fourth time it hits it, it usually takes a big dump. I don't like the fact that we were up at this level twice already. That is a little bit concerning to me, but we'll keep our eye on it. But I do expect them to have good earnings, so maybe we don't hit it three times. Maybe we bust through it, this time. We'll see. Keep your eye on it. You can take advantage of the IV run up towards earnings. The other things to watch out next week is going to be a big retail week. Next week, we got earnings coming out from Walmart, Home Depot, Target, TJX, Nvidia, and Alibaba. Nvidia is going to be interesting. They've been running up and running up. They've been killing it every day. It's like you could have made boatloads of cash trading Nvidia. Let's check it out. Whoa! Oh my gosh! Jeez Louise, this is absolutely freaking nuts. You never see, I mean, here and there you see stuff get to R3, but you really don't see it like that. Again, they're up against the previous. They just blew through that a little bit here, right? And then we got this going on up here that we got to worry about. So we'll see, but I think they'll kill it. I think they'll have no problems running up to earnings. I mean, this is probably something that can hit $400 if Spies and QQQ cooperates next week. I'm going to be looking for entries on this myself. I wasn't even aware that they had earnings until today. I did some aftermarket research, but yeah, keep an eye on Nvidia. So, with that being said, let's get into our main topic today, okay? So, like I told you guys in chat, I am currently experimenting, okay, with some new strategies because this week, end of last week, this week, I have got my ass handed to me by Spy. I mean, it, I don't even know how to even better put it. You know, Spy was Big Bubba this week, and I was Harold, Big Bob, and I was Harold and Kumar in Guantanamo Bay. And it was just a nightmare week for me. I did recover somewhat, ended up, with a littler loss than on the week than what I thought I was going to have based on the numbers. And fortunately, I was able to, climb back out a little bit. But I want to share with you some of the things that I figured out. Now, we talked about this VWAP strategy. And of course, there was more research and things that I needed to do in order to validate it. And like I found out the hard way, turns out, even though we don't trade above the upper VWAP band or trade below the lower VWAP band for very long, we can trade on it for a long time. So my conclusion is, and from things that I had to tweak, is you want to look for pin bars on it or just below it. So if a candle closes as a pin bar on it or just below it, that's typically indicative of because you want to get confirmation. You don't want to just say, "Oh my God, it's a solid candle below. Let's get into some calls." No, because it could trade on it, and then you're screwed. Or same thing up here. So you want to look out for confirmations, and then RSI and VWAP. This VWAP strategy work together, so you can see that it's oversold. It's a pin bar. It's touching it. It bounced, and at the close of this candle, you can get in, and boom, there you go, run up. That's what you want to do. Same thing with puts at the top, pin bar, bang. So back-to-back plays. So if you would have, gotten this at the high, closed this candle out, boom, wrote it down, took profits along the way, got out, boom. You know what I mean? That's how you play it. So took me some, you know, uh, some trial and error to figure things out, but I got it back to a nice win rate for this. The other thing is swing trading. Now, I have long been a proponent of swing trading because you can make way more money swing trading than you can scalping. A lot of people don't like swing trading. I get it in this environment, and I know. I don't like it either because a lot of the biggest trades that I got clapped on this week were swing trades. But those were also Hail Mary, just, swinging for the fences type swings. They weren't strategic swings. They weren't, I know what I'm doing, I planned this out type swings, right? So let's see what happens when you do have um, swings that you actually plan out ahead of time. So I posted this earlier in the chat. It was a pin swing, and nothing big here. One contract out of the money, 6/12 expiry. It was down for a little bit, but then came back up. I basically sold it for the same thing I bought it for. But the point is, you see this gain, this $1,700 gain, 1,700% gain. That's the point of why I thought this was important. See, like I told everybody, it's not about risking two, three, four, five, six, seven, $8,000 to make $5, $6, $7, $8, $9,000, $1,000. It's risking 60 to 250 bucks to make, thousands, right? Now, suppose, um, you know, you would have gotten in, and then it was low IV when I got in it too, right after earnings, and it was down, so I knew it had to recover. So, just extrapolate these numbers out. Just imagine if you would have bought, I don't know, you know, 5 contracts, less than $100. You know what I mean? Like that would have been it's just, this is the goal, the percentage gains, not necessarily a specific dollar amount, and then how much you're risking too for the percentage gains. That's what I want um, people to focus on. So the more I learned, like I told you guys yesterday. Oh yeah, by the way, I little side tangent. YouTube took down my video yesterday, my market video recap from yesterday. Boo! And I was angry, and I was ready to go to a different platform. I disputed it, and they put it back up. So yesterday's recap is back in effect. You guys can go check that out on the YouTube. It's already posted in the Discord chat, so you guys can go check that out. There's a clip in that video I want you to see if you haven't seen it already. It was about the way my day went. It was pretty funny. So I put a lot of effort into that video. So that's another reason I was mad they took it down. But anyway, it's back up now, and you guys can go look at it. Now, swinging low IV stocks on longer time frames, right? So picking their settings too, by the way, on TOS to help you identify what you're to basically be a guide, right? So right here in this column, we got implied volatility, probability, out the money, delta, bid, ask, right? Those are, pretty standard things, but the more implied volatility, the more money you can make or lose on the trade. And you see that, let's look at the 15th, right? Look at these out of the money calls. Look at the implied volatility for these. Of course, these are dead money. So maybe we'll look at the 22nd. So look at the implied volatility. Okay. And look at the bid and ask, right? And then, you can look at the historic price fluctuation of the option. So if you right click and go to send to, and I have mine set for lilac, you can come over here and see the high of this contract, and you can see the low, right? The low was 44 cents, right? It's currently trading for 115 for the ask. Somebody's asking you to buy this for 115, whereas the sellers I'm sorry, the sellers are wanting you to buy this for 115, and the buyers are not trying to pay any more than 108. But in any case, we can see that this contract has been as high as 861. So just imagine it buying it down, right? And having it go to 861. But a part of that is implied volatility. The problem here is that the implied volatility is already so high, and we're so close to the expiry, right? That the only way you're really going to make money on this call is if SPY goes to the moon. Look at the delta, right? And then look at the theta. You're losing. Well, hold on. Okay, so these delta are higher than, hold on. Oh, okay. I'm sorry. I was having some technical difficulty. All right. So the delta on these and then the theta, it's half. So half of your earnings are going to go to time decay for this contract because this is 14 theta, this is 30 cent delta. So yeah, I mean, just pricing options and looking at how to to be able to get in. How do you know you're getting in at a good price? Right? So you can go up and down the chain and some people, be like, "How do I know which options to buy?" Well, you can see how expensive they are. You can see what the implied volatility is, and you know that'll tell you. The whole goal of options is to buy low and sell high. That's the goal of anything in sales. High implied volatility is not what you want in a contract that you're purchasing. So let's go a little bit further out where the implied volatility can be low. Now, it depends on the type of option you're trading too, because in times of economic uncertainty, it can drive prices like SPY up. So typically, you want in periods of low volatility, in conjunction, of course, with chart analysts. So if you go to a chart and you say, I see a pattern, maybe it's a bullish bull flag or whatever pattern you see, and you come over to the option chart and you want to buy something, make sure that whatever you buy, like you can see the historic price. I showed you how to do that. Also, you can see level 2 of options too. So like if you go to, let's go to SPY. Okay, this is better. This is a better example. I forgot. I thought we were looking at SPY. We were actually looking at VIX. That was my bad. So now, yeah, okay, implied volatility is much, much lower. Okay, this is a much better example. All right. So, if I go here, first of all, let me close this out and go back up to near expiries and see how that changes. Okay, so the closer you get to expiry, the lower the implied volatility. And the reason for that is this market is basically saying this option ain't going nowhere. Okay, in order to win at options, you have to prove the market wrong. I'm going to say that again. In order to win at options, you have to prove the market wrong. Or another way to put it is the market must be proven wrong about what they think the direction or the probability of significant movement in this direction is. That's actually a better way to put it. So 1% implied volatility. So in other words, and you can see that reflected in the bid ask. There's nobody selling or buying this. Like the bid is 0, the ask is 1 cent. So nobody's, and obviously this is dead money, but you get the point because today is all this is done anyway. So if we go to the 18th, you can see the implied volatility pick up a little, but basically the market is basically telling you that the fate of these options is predetermined and sealed. And the only way to win with these calls is if they find a cure tomorrow and it breaks over the weekend. boom. That the market's not expecting that. And it's clear from this implied volatility. So that's just a little hint about how to profit from implied volatility. The other thing I wanted to talk to you guys about is not trading in the channel. The problem is, and I don't know how, a lot of you trade, but I used to trade 5-minute candles exclusively, and I got cucked. Okay. Trading just, and, even with pivot points on, because here's the problem. Let's say, first of all, each time frame has its own reference point. So let's say you're trading a 5-minute chart and you're riding this up and you think it's going to go to the moon. But then if you go to an hourly chart and you see that it's about to hit resistance and you're like, holy cow, I could have stayed in this trade and got clapped. Well, that's actually why I had to stop trading 5-minute candles. I only use 5-minute candles now as confirmation for entry, if even that. But I like my hourly candles to have so much movement that I don't need my 5-minute candles. That's what you want to see, because that basically guarantees that you're going to win the trade, because hourly candles are way more accurate. And if you see big movement in hourly candles, you're going to win the trade about 80 to 90% of the time, especially if you get in at the beginning of the candle. It takes a little bit more patience, but think about this. If you would have gotten into NVIDIA at the close of this hourly candle, which, depending on, you would have had to look at the 5-minute candle for confirmation, and of course other things too. But if you did, which is kind of risky because we're at R1 and there's no guarantee we're going to break it. In fact, we could have rejected it, but we never hit it before. So that's a good thing. Now, if we seen where we came and hit it and it bounced down, maybe we could expect a little resistance right there. But we didn't get any. Not only did we not get any, but we kind of broke it before the close of the previous candle. So that kind of lets you know right there, well, maybe this is going to be a cakewalk. And you get in and you sit there for an hour and boom, let's look at this. So 334.67, 339.60, right? You could have been in the building. So trading on hourly time frames for me is something that is very that I learned works really well. Not channel trading. So I don't trade I'm not going to trade anything in here anymore. Okay. Nothing in between these points. If it bounces and goes up tremendously, that's nice. That's maybe someone else can trade it. Breakouts. Okay. Breakouts. That's what you want to trade. So ideally, you would have liked to have gotten into this trade at the close of this candle and actually rolled it up in each hour, taking profit. Ideally, like you could have saw this coming a mile away, got into, and then you would have been feeling safe in a trade is very valuable. Okay. When you're trying to guess the direction and you're scrambling and trying to just go with whatever you think, and then you got to bite your nails and, oh my God, is it going to go my way? That sucks. Wouldn't you like to just get in a trade and know it's going to win? If you would have followed this procedure, you could have known it was going to win and you could have locked up profits every step of the way. There is no red hourly candles here that even a little bit of pullback. I mean, it did fall, these two, but they recovered and closed green, right? Near the top of their wicks. In fact, this has a little teeny wick. You probably won't be able to see it on this video. And this has a wick. But other than that, and this one up here, but that's only because it's running up against a resistance. But the point is, there's like no wicks on these hourly candles. no upper wicks. That means they barely got rejected from their highs. They did a little teeny bit, but not, there's no, like this. You don't see any of this up here. So you got to just pay attention to the little stuff, right? Look at it on multiple time frames. I use different types of charts to give me different context. Maybe if I miss something on one chart, I can catch it on another. So, oh, I meant to show you guys something real quick about TOS. So remember, level 2, you can actually change. You can look at options on level 2, and this is so sweet. I didn't know this until recently, but look, if you go down, this by default will tell you the level 2 for the actual stock, which is nice, and if you know how to read it. But if you want level 2 for the option, check it out. You come down, you click on it, right click, go to send to. Well, actually, I have to change this to a different color for this to work, but yellow. Okay, so come down here, right click, send to yellow. Boom, you get the level 2 for the option. That's freaking dope, because then you can see how the prices change in real time. You can see how many people are sitting on the bid, and how many orders are sitting on the bid, and how many sitting on the ask, and at what price they're sitting there. I mean, it's a whole nother level. Yeah. So that's awesome. So with that being said, let us get into the plays. So the first thing we got going on here is this DraftKings swing that we got that was in calls. And in the beginning of the day, DraftKings gapped down. So when we opened up today, you can see, boom, big candle down. And I bought calls, and it already, so I'm looking at my P&L, and I'm like, oh man, you gotta be kidding me. Let me get out. Stupid. Dum, 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 wham. Price is Right, losing horn, right? So that's what I get for being retarded. So yeah, that was that. Then we got Home Depot, and this is the beginning of when I tried to do this strategy that I was testing out, that I had already proven on DraftKings. Actually, I forgot about that, because in chat we were talking about DraftKings, and everybody was buying all these DraftKings calls, right? And I told people to be careful. Hold on, what chart was that? DraftKings. So I was telling people to be careful, because what I saw was R1, right? And I saw that we came up to R1 and got rejected. See, look at all this rejection here down at R1. And I was telling people in chat, basically to take profits or, get out. And it came back, recovered, it channels on it. And I told people in chat too, whenever you see something channel on a level, it's probably going to break it. Chances are. Because it wants it. It's up here. It's not going anywhere. It's getting rejected because there's a lot of sellers up here, but it's not giving up. Like, it didn't just say, ooh, okay, whatever, we'll just channel down for the rest of the day. It stayed up and it didn't give up, and it broke it. So yeah, that was initially when I was looking at this strategy. And then the next thing was Home Depot. This was actually a really beautiful play because at the close, and this was a big experiment, but it worked out. At the close of this hourly candle, I got into puts. And it went up a little bit, but then, boom, it dropped all the way down to here, and I got out the trade. Because I saw that VWAP was right there, so I knew it would bounce. So, and then, it goes up, and then I get back in on this candle. Boom. Check it out, folks. 890. So this trade actually, took out this losing trade. So that's nice. Then we got SPY. We bought the SPY. We swung the SPY calls yesterday. I was down $8,000 on this trade. And as you guys probably know by now, SPY gapped up. So I got out of these calls once I saw that they were, gradually starting to lose money. And then I got out of them, and then I grabbed some SPY puts, and I was able to make back all the money I lost, and then $300. So that was cool. So I tried to not overtrade today. I made a promise to myself that I wouldn't overtrade anymore, and I didn't. So this was a swing. This was a 1-play deal, 2-play deal, and this was a swing and a 1-play deal. So I'm going to do this. I'm going to do some research over the weekend, post some ideas in the Discord server, and I'm going to plan my trades and trade my plan. And that's what you got to do, guys. Simple as that. Don't ever count yourself out. Don't ever get down, to where you're like, oh, I can't do this, because everyone's going to have bad days, right? But the key is to stay focused, develop your plan, study, get better every day, right? So that's it for today, guys. Like and subscribe, share the video.
Today, our heroes came back from another $8,000 loss on back-to-back days. Unbelievable! Meanwhile, SPY will look to test the next resistance level. And some important earnings plays are coming up next week. And with this newfound strategy, our heroes look to make a killing next week. How will our heroes fare in the fight against the SPY gods? Find out next time on an exciting episode of Trading Bull Z.